Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free weekly video report for Tuesday, July 11th, 2017. So, in the notes that I had put out with this email, it's a little bit of frustration that's out there, and I didn't mean to step on any toes, but it gets frustrating when you get people that they're not members of Sentiment Timing, and they're trying to take the free information that we give out and try to assume that what we're saying in that is that we're making a top at that particular time, and that's not what we're all about. And that's some of what I'm going to go over in this video, and I'm also going to go over what's going on right now in the current environment. But hopefully the two reports that are out there, because really that's when I started getting the email saying that we've been calling a top since April, and that's really the furthest from the truth. We have not been calling that. We've been saying that it's a golden halo top that is forming, and eventually is going to work into itself into a kill zone. And yes, most people will probably be long when that happens and buying the dip and get caught on the wrong side. But we've never ever been saying that the top was coming then. And in those two, the links that I have in there, hopefully will kind of end this that we've been calling a top since April, because like I said, it's not the truth. So when is the is we use three different things. We have time, sentiment, and technicals. When that those are the technical timing indicators that Woody uses, which I'm going to show you some of them in tonight's video, that predicts highs and lows in the market. And we're going to get longer term highs and lows, and we're going to get shorter terms highs and lows within, say, a larger trend. And that's just the way the whole market works, and you have to know how to navigate in and out of it. The sentiment is giving us the why, and that sets up a lot of the patterns that Woody's has, and then we just use the technicals to figure out where. So when we're talking about the golden halo going into a kill zone, that's say this larger cycle right here. But in between that, we're going to have smaller cycles that where we're going to get 6% bullish sentiment like we got last Thursday on the big drop. And we warned our subscribers both pre-market that we had a 6% sentiment reading. Wouldn't be surprised to expect a pop. And in my morning notes, I had said that, with the sentiment being so low and we were at support with the S&P, shorting is a very high risk trade right there. And I said, me personally, I'd rather like to see a pop back up to the 2432 to start building a short position, and that's where it went to. So you have to know how, basically how these sentiment cycles work. And the euphoria is this, that's the golden halo part of it. And that's when you start seeing the sentiment readings that go like this, where they're just nonstop. Everybody's bullish on the market. That's the euphoria part, and that sets up this golden halo pattern. And then what happens is we get a drop and it bids back up again, and nobody is really concerned about it because they've been trained to buy the dips. But what happens is when they buy the dip and then it starts going through support, and they start listening to everybody on the news station saying that this dip is it's a buying opportunity. And then when it goes into a panic move, everybody starts selling. And that's pretty much when you want to be buying. You want to be buying the dips when we have panic and capitulation. And when you're at the thrill and the euphoria, you start looking for dates and technical reasons to start building a short position, which I'll show you in all this. So this is, again, just to try to stop the whole where we've been calling a top for over 2 months. And this is the June 8th report that we put out. And I have a few things that are in there that I want to go over because I think it's pretty important. Is this golden halo formation? It's good news, new highs, high sentiment, and it's typical of the golden halo formation. And what has happened was stocks moved into the twilight zones, and what it means is the topping process is both very mature and strange. So it's not something that you want to get aggressively buying when you have everything that's looking the other way as far as the research that Woody has done. So here, what he was saying was, the Trump top is going to result in an important decline. However, as he has noted for weeks, it's not necessarily a reason to be aggressively negative. Corrections are normal process which begins slowly. But this is the part I want to show you: is the next nominal tactical low date is 615, followed by an upside flurry into 620, 623. But this is the part: better negative tape is going to be coming in July and better ones in the month to follow. So going all the way, and this has been said for a month before that, that it was never supposed to be the big drop until July and August. And this is where we are. And I wanted to point out this part because I'm going to show you something. So again, we know when when that we have a larger top that was forming. But just going back and remember, there's supposed to be a tactical low near June 15th and a flurry into 620. So low, high. So let's take a look and see what it did. And this is what our report is all about. Where here's the 615, the exact low, rallied all the way up into the 620. We actually got a 99% bullish sentiment reading, and that actually marked the top for this entire rally. And this is what Woody is calling the golden halo top is in. But what happens is when we get these big drops, we're going to get this 6% bullish readings, and we are at support. And basically, in the morning notes, I just said shorting here is dangerous. Wait for the 2432, which is exactly where we went to. And from there, we had a decent drop. So, yes, we have a bigger picture with this golden halo and the topping pattern. And eventually, it's going to move into one of these kill zones, and the kill zones are these massive moves. Is it going to be this big? We don't know. We'll figure that out when we get there. We know when to expect a low, and from there we're going to get a counter trend rally, and it's probably going to be tradable to the upside, but then it's going to be followed by yet another a big drop. And it's important because really the last time the last major golden halo was in 1987, and we knew that the S&P dropped 37% in 3 weeks. But again, we're not, yes, that's the bigger picture part, but we have these moves that come in between that people can take. If you're a trader, you can take a trade. And honestly, if you look at this, I mean, from the 615, we were at 2418, made a top at 2454, and from here we came all the way back down to 2405. So just this right here is over 100 points on the S&P, and that's just being a trader. Now, if you're on the side of, say, an investor, or let's say you're a position trader, you don't worry about those moves. You can care less about what these things are doing. You just know that you want to stay short, and you have your stop at the 24.55, and then from there you know when to expect the first low date, and you start actually covering some of your short positions. If you're short, wait for the bounce. If you want to be aggressive, you can take a trade on the long side, and then wait for the next top date to come, because it's going to be followed by another move down. And that's really what sentiment timing is all about. So right now, the pattern, the wave structure, if this wave 5 completed of 3, the expected move could come all the way down to 2300. Is it going to go straight down? Maybe. Is it going to bounce around and then come down? Possibly. We're going to look for these dates that Woody gives us, and match them up with sentiment to determine whether you want to stay aggressively short or put stops in place. But that's what I'm talking about, where you have smaller moves within the bigger move, and it all depends on what kind of trader, or are you a swing trader? Are you looking for quicker moves? And you just manage your portfolio that way. But once we get this move, and I'm just picking out this as initial target 2300, because if it holds and we get a bounce, this is most likely going to be the wave 2, or we could come all the way up and make a wave 5 and then head down again. But right now, even with all that said and done, what the bulls have to do, they need to push it above 2440 and then to 2444. That's going to get them out of short-term, out of the woods. But then they have their, the resistance at 50, and then also at 54. So we know we're in a negative time period, and they're at resistance right now. And what the bears have to do is get it through this 2404. If they do that, The first target's going to be probably down to the 2360. But again, we have to see what's playing out with sentiment at the times, because if we get an extreme sentiment, reading, it's not one you want to get aggressively short, because if you notice, every time we've gotten very, very bearish sentiment readings, we've had a huge spike. So this is why it's important to have this, data that Woody's been collecting and really helping out some of the largest financial institutions in the world for over 40 years. This is why, because it measures the psychology of the market. It doesn't, and then when you match that up with price and actual turn dates, it gives you really an unfair advantage over anybody else. So right now, whatever happens tomorrow happens. We just have to keep an eye on things. Just know that the bears need to get through here. Bulls need to get through here. We already know when the next low date is coming. If you're only let's say a buy side person, you want to just stay on the sidelines until we come to that low period. Buy, and then most likely we're going to get a massive short covering rally that will be something that you'll be able to participate in. So with that, enjoy the rest of your week and have a great night.